All right, so in this video, I'm going to talk a little bit about what politicians do in response to the business cycle, and specifically in this moment, um, when we start heading into like a recession or something like that. So if it looks like the economy is heading into a recessionary environment, politicians in the United States tend to do some combination of the following kinds of things: lowering taxes, increasing government spending, tax rebates, changing depreciation rules, all of these kinds of things. So let's talk about those in turn. The idea behind lowering taxes would be if we lower the taxes, we return more money to the taxpayer or allow the taxpayer to keep more. Hopefully, the taxpayer spends, invests, does things that would hopefully help to grow the economy. And if that's the case, this could hopefully stimulate the economy. We get back to growth and so forth. Um, Increase government spending. At some level, this is sort of a Keynesian kind of an idea for Keynesian economics. The idea that if the government spends more, we get sort of a spending multiplier. This helps stimulate the economy, maybe replaces the diminishing consumer spending because consumers are scared and we're in the face of a recession. So maybe we're going to spend on infrastructure or roads or various programs, what have you. Maybe tax rebates, maybe we return more money. So not just lowering the tax rate, but also we send you more money back. Again, that's trying to get the consumer to spend it, basically stimulate the economy through consumer spending, things like that. Maybe we alter depreciation rules, and so we tell businesses, hey, you know what? If you buy a bunch of equipment right now, we're going to allow you to depreciate the whole thing the first year. And if you're wondering, well, why? What does that do? Well, if you're a business, if you can depreciate it all the first year for tax purposes, that would mean that I save the most money in taxes right now. So let me pose a question. Would you rather save $1 in taxes today, or would you rather save $1 in taxes in 5 years? Well, I'd rather save the dollar of taxes now because that dollar that I save now is worth more than the dollar in 5 years, because the dollar in 5 years, from a time value money standpoint, that's down the road. We got inflation between now and then. A dollar saved today is worth more. So from a tax standpoint, sometimes what the government will do is say things like, all right, you can more aggressively depreciate or maybe even write off the equipment entirely if you buy it now. And then for tax purposes, that saves the business more money on taxes today, which is more advantageous. And basically what they're trying to do is trying to encourage businesses to go buy equipment, go expand, go do things, and basically we'll give an incentive for doing that. And the goal is to stimulate economic growth and try to get the company or get the economy out of a recession and things like that. So those are the kinds of things that politicians tend to do with fiscal policy. So fiscal policy is spending and taxation for that is established by the government, right? So typically that's the basic idea of what the government is trying to do in terms of the federal government and Congress and the president when he signs it and all that. It's some combination of these. Now here's the little challenge with this. So sometimes as you slide into a recession, the economy is going down, all these conversations occur, politicians talk, and they finally pass some kind of a bill that everybody can agree on. And so sometimes they finally manage to pass something, and sometimes it takes months for something really meaningful to be passed. And if it takes months for something really meaningful to be passed, sometimes by the time that's happening, a good portion of the recession is already over. Or in some cases, they are authorizing infrastructure projects or things like that that aren't actually going to occur in some cases for years. So sometimes it's worth evaluating not just like the headline amount of spending that the government is authorizing in an attempt to stimulate the economy, but also like what's the timeline for this spending, right? So if the government has authorized spending of, you know, X many, trillions of dollars or whatever else, when is that going to be spent? Is it all going to be spent in the next year, which would be a lot more stimulus during that period, or is this they've authorized trillions of dollars of spending, but the reality is this is going to be spread out over the next decade, because if it's spread out over the next decade, I mean the recession should be long gone by the time, hopefully, by the time a lot of that spending goes on. So something to evaluate there is like when is the spending actually going to happen? If they're authorizing new airport expansions or new highway projects, whatever else, they might have to do environmental impact studies. They might have to, coordinate with local jurisdictions, get bids, et cetera, et cetera, et cetera, before any of it starts. And the reality is, what that means is they could say they're going to spend a whole bunch of money to stimulate the economy, but the reality is it might be a long time before any of that money actually gets spent on whatever that project was, and therefore helps to stimulate the economy. So you have to kind of pay close attention to it. Of when is this actually going to get spent? What's it going to get spent on? And then kind of judge that in terms of just how much of a stimulus effect is it going to have? Because different spending would have different effects based on those kinds of things. All right. Hopefully this video has been a little bit helpful. Thank you so much for watching, and have a great day.